Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is December 23rd, 2024, and we're looking at Bitcoin as always, following up with where we left off on Friday's video. We did see Bitcoin make lower low closes and a lower low swing with now a lower high. So we do have a bit of a structural change here on the daily for Bitcoin. And we'll just kind of point out a few important things about this developing structure. And that is that so far, what Bitcoin has done has swung all of these lows, right? So this, of course, this higher low swing broke down from the Wednesday into Thursday candle, lost the basis band of the Bollinger Bands here, which is the 20 simple moving average, and it moved down through the Bollinger Band. So it went from the upper second down 1, 2, 3, 4 standard deviations to the downside. About a 15% correction so far. It is trying to find some equal low structure here. We'll see if it can maintain that. But we went from an uptrend to now a trend reversal structure. So it is technically a downtrend on the daily in terms of swing and close structure, because now we have a lower high, we have a lower low swing, and then we have lower low closes over here. So lower low, lower high, lower low closes, lower low swing, or equal low swing here in this case. Essentially breaking down from, any of the structure over here, which is essentially right around this high right here at $92,000. And, I'm looking for it to possibly swing, 90,000 and under this low right here. If it starts to break down from either one of these lows between 90,682 and this 88,700, of course, then, the bulls have to hope and pray they can hold on to this bit of order block structure over here after the initial expansion to new all-time highs. So there is the important area is really right around this $90,000 level and the $85,000 low post expansion here on the daily. Anywhere below there, $73,000 to $75,000 is fair game. That would bring the range kind of to just above this structure over here of the prior consolidation and into a retest as a possibility. And that would happen on any closes below the current lows, which would also put it below the lower second standard deviation, kicking off expansion to the downside into some of this low side support structure. If it's lost, it's continuation of expansion over to this order block structure on the daily, and then possibly lower. Now, some criteria to the upside, right? Pretty simple, straightforward stuff. We have Bitcoin back above the basis band. That would break this swing downtrend and closing downtrend here. It's more of like a sideways swing downtrend at this point. It is going to show closing lower highs, but it's more of a swing lower high at this point. And it's in trend reversal position for continuation. And then, of course, for full trend, you look for another lower high, lower low. And in this case, it would be lower low and then another lower high on any closes below the current low side structure, kind of coming in around $92,000, give or take a couple $100, depending on your exchange. Another lower high would be complete trend. But we're going to take a look at a few things here as I kind of get rolling through support and resistance, and then some volatility metrics and momentum stuff. But in terms of trend, the reversal setup is pretty clear for both bulls and bears for continuation, and then possible fake outs, right? Sweep of the lows. Maybe this is it, and then it comes back up. Well, how would we know that? Any break back above around 99,600 would break the swing downtrend here, and then we can start entertaining trips to around 100,000 to the upper first at $102,000, right? And then we're back to the high side structures over here. So we've got, essentially $100,000 just above the basis band there, and this last lower high swing at 99,600. Then we're looking at about $100,000 over here to around that 102 area. Above there, we do have to contend with this swing high at 104. And I still would be looking at this again, just like before, 104 to 106 now by the upper second standard deviation above there. I'm going to take it 2K at a time, just like I had mentioned before, at least in the time frames lower than the daily. And we're focusing in on the closes because the closes are what is going to matter for the not just the trend breaks and trend continuation, but also for expansion of volatility. So in this case, back above 106, then we can look to 108, and then back to the highs here, where that 108 is to $110,000 by the upper third. You can see that the $90,000 area is being bracketed by the lower first, or the lower first. This is the lower third, literally pointing at it and reading it wrong. But that's right at this low here, essentially. Anywhere below there, like I said, we're looking at this consolidation structure or order block structure after the expansion to new highs. So pretty straightforward stuff. Let's go ahead and turn on some more macro support and resistance as it relates to the local structure here. And you can see that the fib pull that you're seeing these extensions from is from the bear market, 69K down to 15.5. We have the 1.168 right here, lines up perfectly with this low over here. Now, this is not a traditional fib number. This is one that I back tested the ever-loving crap out of in both traditional and crypto markets. So this is Landy's own cook on the actual fib number here at the 1.168. Again, this is not a 1.618. It's a 168 or 16.8, not a 61.8. And that is right at the bottom side of this, essentially support zone that I've drawn here that encompasses this closing low side structure, which is where we've seen, the big swing low from this $12,000 candle back on the 5th of December. We saw support in this area. This was prior resistance, a little bit of a swing above it. And then we've seen, a little bit of a front run of this close open support zone as well. So, if Bitcoin starts to lose this area on a close, especially, we're looking at expansion below the lower second into the next area of support, which is this little daily candle cluster over here. Top side of these candles, bottom side of this swing low here at that 88,700 just happens to line up with my 1.168 fib number. This was one that we were talking about for a little while there at 88, essentially $88,000 to $90,000 was the range. And of course we saw that being tagged, close enough kind of thing. To the upside, we've got the primary overhead resistance here at that 101.174, which is the close open resistances here. We've to the swings above there to $104,000 before putting in that high at 108,388. So essentially, if we regain the green zone, start closing above around $104,000, that would also put Bitcoin back above the bear market fib extension. This would be the 272. So this is a standard fib extension at 103,645. And then essentially we're looking to that, 106, still have to beat that 104 on a close. If it didn't already reach the upper second by 106, then I'd be looking for it to do so about 106 to 108, 108 to 110 by the upper third standard deviation. Then, of course, there's 112 from a more local fib pull from the structure down below. Not going to get into that today until I see a reversal. Now, on Wednesday, which is going to be Christmas Day, I actually will try to get a little short video out just to see where things end up. Are we going to get the Grinch who steals crypto Christmas, or are we going to get Santa Claus coming in and helping out by picking up price? We'll see. That remains to be seen. So I will try to get a video out. If not, then I will definitely have a video on Friday. So now, down below this structure here, you can see that I have the red line here. This is $85,000. Anywhere below there, I'm looking essentially mid to low 80s, right? 85. We're looking then down to around like 82.5 to 80,000. And then down below there, essentially looking 75 to 80, and then 73 to 75 kind of being the key zone for a retest of the prior structures breakout. That big consolidation structure that Bitcoin was stuck in for 6 months. So to the upside, obviously, this would be expansion to blue skies. To the downside, it's all expansion into support. So we're just taking it level by level to the downside. Now, let's quickly go over a few important things here. Let's take a look at. So we talked about. I've incorporated essentially our key tenants, our first three, our trend, support and resistance and volatility kind of into one conversation there. So let's look at momentum. And the relative strength index, or RSI, is a momentum-based indicator, and it is based on closes. This is running Wilder's RSI. You can see that over here. Might be a little small for some of you. I do apologize, but I'll read it out for you. The next big area to pay attention to on RSI is the edge of the bearish control zone to the downside, as a rough estimation of where it might line up with our areas of confluence on the chart, right, for closes and swings. And in this case, the edge of the bear control zone is at $91,000. So where does that put us in terms of support and resistance structure? Well, it puts us right here in the red zone. And in fact, it's essentially like kind of, splitting the difference between 92 and 88, a little bit more towards the upper half on that bias there, right around and just above this low swing structure from this close open here. And that's coming in at like 90,682, right? So that would put Bitcoin on expansion into this support area, and like either in or right at the edge of the bearish control zone. And any kind of a bounce from here that puts in a low on a close, which will happen on any closes back above. You'll see it populate on any closes back above 96,430, but realistically, I need to see closes back above the Sunday open, which opened at 97,230. That would pay, if it was going to be a 3-candle structure and happen, today, which is now Tuesday's candle, even though it's still Monday for me. Then I'd be looking for it to close back above yesterday's high or Monday's high at 96,430, and then take out that open from Sunday at 97,230. So that's kind of what I would be looking for, that $800 range at the top side there, and then go up and take out that swing high. And then we're looking at Bitcoin having a solidified low in on a drive of hidden bullish divergence in this case, which is coming all the way back from here. And that is going to be the low side structure there at 88,730. So as long as Bitcoin is trading above there, it has the chance to throw hidden bullish divergence, and even further back in time, but more relevant to the current structure that we're seeing play out right now, right? So that's the more important one. Other than that, we need to see regular bullish divergence play out, and that can only happen if we get closing lower lows, right? So, and the lows need to be set in this case. Right now, we're not in that, we're not looking for that because we don't have closing lows set just yet. But once we do, then we can start looking at, if there is any lower lows, regular bullish divergence paired with maybe even prior structure from down below here, hidden bullish divergence as well. So that is usually, those hidden bullish divergences aren't going to matter, though, when you're looking at in-trend bullish divergence, which would be your regular bullish divergence, which we don't have the possibility of right now. Only really looking at the possibility of some hidden bullish divergence playing out from within the local structure here. So now, excuse me. Sorry. All right. So next relevant area or benchmark on RSI to look at is the 50 read here, and that is the scale midline. That's coming in around 97,350. If we were to look at the confluent area, that puts Bitcoin essentially closing this as a low. If it were to, if price were to close right from here and close that low, essentially that is the area to beat. That would be scale midline, and that would actually confirm a low, put in the bullish, hidden bullish divergence, and so on and so forth. So, and then of course we need to see where the edge of the bullish control zone is to the upside, and that is going to be 105,250 essentially, and that would put Bitcoin obviously right back towards its highs here, playing between the upper first and above the $104,000 area, kind of between that 104 to 106. And then we'd look for things to potentially, either wick up to that 106 to 108, then 108 to 110 by that upper third. And then we're looking for expansion on any closes above that upper second, upper third zone, into blue skies, of course. Now, let's take a look at our, we lost this trendline regression. There was two areas of interest for trendline regression here on this structure. And once that broke down, we kind of we were already kind of getting, yeah, we're going to go test further downside within the current structure, maybe even outside of if we drop 87 and a half, essentially 87 400 to that $85,000 area. We can see that Bitcoin has entered the bearish control zone of a regular stoch. Again, I need to stress this. This is a regular stochastic momentum indicator. There's tons of free ones. There's tons with pivots and all kinds of stuff for when it would turn. This is not a Stoch RSI. Stoch RSI is unneeded in the way that I evaluate price action because we already have an RSI. A Stoch RSI just measures the velocity of that RSI. We already have an RSI. I don't need it. It's already a momentum indicator or a strength in terms of momentum indicator. In this case, we're getting close over close price momentum data from a regular Stoch, and we have a pivot of 97,217. So again, we're getting this Sunday open candle as the identifying candle to close above there at around 97,230, right? That would set the low, set off some hidden bullish divergence, and then that's not an automatic like, oh hey, correction over, but at minimum we can start looking for further upside price action based on that if it hasn't already played out to some of the zones that we talked about to the upside in a swing or wick fashion. And in this case, that we're getting pretty deep in there, and it would actually benefit us to take a look at the 12-hour and see where that is. So it's probably still, angled down and entering into the oversold zone, possibly on this next close below $97,000. If that were the case, then we'll see this head down further into the oversold zone. Now, Bitcoin on a regular Stoch can remain in the oversold and overbought zone. So oversold down here, overbought up here for an extended period of time. So just understand that that's kind of what we're looking at. Maybe even considering all of this, we should take a look at the 4-hour. So the 4-hour is $94,000 for the pivot to keep this pointed to the upside. Bitcoin, of course, trading at 94,271, so slightly above. We see a lot of regular bullish divergence beginning to show itself, but that, of course, this is in trend bullish divergence because we have a downtrend on the 4-hour. We might need to see a little bit more, especially if it holds this zone, see a little bit of a momentum reset and start seeing some of those trend breaks start to develop on higher term timeframes relative to the 4-hour, and then look at where the 4-hour is. Has it expended all of its energy or momentum getting back and making no progress, or is it starting to make progress and then we get another dip down? That's the one to maybe get into. Now, that's something that if I have time again on Christmas Day, I'll try to get a video out on Wednesday, but we'll see. But we'll maybe revisit that. Let's look at the more macro picture. This is a macro Monday after all. We can see that Bitcoin has done essentially what we've talked about. It's come back and retested the upper first standard deviation. You can see how that's lining up with this bottom side supports on the daily here that I've identified as being some of the more important ones there at right around $92,000. And as long as Bitcoin is trading and closing candles above the upper first from the perspective of volatility, and I do say closes, that does mean it can swing down below on massive giant wicks, right? But on closes above this preserves the zone between the upper first and upper second as the zone of volatility of interest. And in this case, it's at the bottom side of that right now. If it loses it, then we look at the zone as the upper first and the basis band. And the basis band is currently at $75,000 or so. So again, 75 to around 72 to 73 over here by these highs is kind of where I would be looking if we started to see like $80,000 break down, on any closes below, 85. Again, I'm looking like 82.5 to $80,000, and then, 75 to 80, and then possibly down in for a retest of the, of this big accumulation structure. So, looks fine, back to the upside, upper seconds just above the highs there coming in at 109. If Bitcoin starts to turn green on its weekly candle this week, we will see this upper second slightly adjust, likely to around $110,000. And, I think that would make a lot of people very, very happy. But, this is our Christmas chart, red and green. Now for me, of course, it is a little bit of green and purple, but in this case, this is a nice correction after expansion. Could it go deeper? Sure. Just keep an eye on the downside criteria for it to do that. on daily closes as it relates to the weekly. Let's look at a few other things on the weekly. We do not have any current in trend bearish divergence. Yes, there is hidden bearish divergence that has populated. It hasn't actually painted a weekly closing high just yet. And what would the criteria be for that? No, it actually did. I don't know why this is being goofy. This is a weekly closing. Oh, this is why it didn't paint the weekly closing high, because it didn't close below the second week of December's candle low, and that's at 94,220. If it does do that, it'll paint a high. It's arguable. Many people would say, because it closed below this close open right here at 97,260, it's a high. I'd say that's fair, but if it can't close below, if it doesn't close below the 94,220, then it's, just a swing high to swing low structure here, and maybe even turning into a swing higher low structure, right? And we do have, right, we have a closing higher high on a swing and a close, right? We have a closing higher low down here and a swing to a closing higher high. So we have, we've been looking for this. We've been looking for another closing at minimum swing higher low, or, we're looking at a closing higher low or a swing higher low as the next criteria for full trend on the weekly. And, maybe this is going to be it right here, right now. We'll see where the higher low is going to come in. I highly doubt we're going to see Bitcoin closing back below 58,863. Doesn't mean it's impossible. The lower first is right there on the weekly, but realistically, I don't see that as being a viable option for people to be looking out for, to be quite honest, even though there are people looking out for that. Let's take a look at a few other things. So again, no in trend, because we have this new trend now on Bitcoin. There's no in trend bearish divergence. I would say arguably the hidden bearish divergence already there, or the bearish divergence from a high over here, from the highs over here, already kind of in play. But I want to see in trend bearish divergence start to populate. Because this was a downtrend to uptrend. So I want to see in trend in the new RSI structure that's being built there. We can see that a regular Stoke, again, has turned out. Be aware of bullish resets. And 105,656 right now would turn that back up. I'd say more like 106 if Bitcoin does throw in a green candle this week. But if it does close the week down below this pivot number, we'll see this number come closer. And if it sticks in range, and this gets to around 102, then it's a little bit more viable for it to turn it back up in a bullish reset manner, and bullish reset rather. There might be at a later date some trendline regression stuff here that we can pay attention to, but it looks like it's going to be a long time before that happens. I think I've bored you enough with a lot of the minutia here, especially for the newer people. If you don't understand some of this stuff, I do have a Learn TA with Landy series with the folks over at Deorganized and Peace Love Media, or Peace Love Music, Deorganized Media. On Tuesdays, I've been doing Learn TA with Landy sessions. I walked through trend, support, and resistance, volatility, and momentum as my 4 keys to understanding and breaking down charts. We've done a couple of, implementation live streams since then. Now, that's every Tuesday at around 10 a.m. Pacific Standard Time, 1 p.m. Eastern. They are archived on, of course, Twitter, but there's a playlist on YouTube as well through the newly created YouTube account for Deorganized Media. There will not be a Tuesday video tomorrow. So that will be, I think we're taking 2 weeks off for Christmas and the New Year on that Tuesday video, and then we'll be back early next year. But there's a lot of information to digest there anyway. So I do encourage, if you are fairly new to this or you're trying to understand how I break things down and you're just now, this is like your first experience or first couple of experiences watching my videos and seeing me break things down, I suggest that you check those out so you can kind of get into my head and how I view charts and break them down. So you have a wonderful morning, afternoon, and evening. If I don't talk to you over Christmas, I hope you all have a Merry Christmas Eve and Christmas Day. And then, of course, I will be back to talk to you before the new year. And yeah, take care of yourselves. Landy out.